So for us, we're Peer Power. Some of you have met before. We are a SME loan marketplace, meaning we match SME borrowers with investors. One thing I wanted to go back to on the first panel, I think when Bren was saying that there is no true P2P in Thailand, and to a certain extent he's right, because true P2P by definition is from retail up to retail borrowers, retail investors to retail borrowers. We don't have that in Thailand. We serve SME loans at the moment. And also maybe referencing the first panel, Kuntiptada was saying, and maybe analogizing the legal framework and the laws of the square box. Very true. So we play inside the square box. And for us, our value proposition is really addressing the pain points of SME borrowers. Currently, if you're a bank or if you're a customer, banks normally are very well equipped to serve very large customers, right? The way they define SMEs is even, for some banks, any company below 100 million in revenue doesn't sort of come up on the radar, okay? On the other end of the spectrum, if you're consumers, let's say in the major cities in Thailand, you're quite well served. I mean, they have these apps, PromptPay, QR code, etc., where everything is becoming free or virtually free. Now, you have a big gap in the middle, right? Aspiring entrepreneurs, people in service businesses, people who have been in business a few years, haven't quite yet reached that 100 million benchmark for some banks. And at the same time, they're drawing down on their personal credit to finance their businesses, especially the new generation businesses were service firms. They do not have collateral. And banks are, well, a lot of banker friends say to me, the reason why this market is underserved, they don't deny it, but it's underserved because to a lot of banks, this segment is unprofitable, right? Now, but if you look at how consumer credit is granted, unsecured consumer credit, you don't necessarily look at his collateral base, you look at his earning power, you look at his capacity to pay, you look at his willingness to pay. Why shouldn't that be applied to SME owners and business owners who are currently, facing the same problems, albeit at a lower rate, because the guy has taken the effort and the time to corporatize himself, and we're penalizing him for it. That's sort of the market we serve. Second question on collaboration. On these structures, you have payments going from one side as a loan to the other, and repayments coming back. Obviously, we don't have a bank, so we utilize banking partners. So we have those partnerships, as well as information partners, where we're able to draw on the financial information of these SME borrowers. So yes, I think your slide about becoming, collaborative, ultra collaborative even, and platforms, that's sort of the future. Because I don't think anybody can do it all, nor should anybody try to do it all. Focus on what you're good at and utilize infrastructure already in place.
Peer power capabilities, right? Your algorithms being a key component of your strategy moving forward. What are you focusing on as your key strength?
The algorithm, or I guess in sort of our case, is the credit scorecard, right? Is when we look at what our core strengths are, we look at the risk management experience of our team that we bring, understanding sort of the key factors that drive the ability and willingness to pay. So one thing which is kind of funny because it's almost full circle. I started work about 19 years ago on securitized products. That's the Morgan Stanley, slicing and dicing credit card portfolios and on-sell them, the credit card securitized. And basically, one of my first jobs is to look at the credit scoring model. What happened 20 years later is the credit scorecard is still pretty much the same. The factors may have changed with the times. Again, every time you do back testing and all of that. So, for us, the capability, that's already an old capability. I mean, what we're trying to do is marry that with new capabilities about understanding the dynamic nature of information, because this is where I think a lot of, fintechs, financial institutions, you call it, the easiest loan to give out, I think, are secured loans, right? Take a low enough LTV, you have enough of strong credit collection, you're in business. It's harder, like Tarkan said, to lend out based on credit worthiness. So I think the capability is not throwing sort of the old and just use the new. Because one thing that we didn't quite believe in was to lend just based on, let's say, social scoring, for example. So some of the factors that we use are still very traditional. Debt to income ratio, debt to cash, cash flow coverage, but also understanding that SMEs in Thailand and probably elsewhere in Southeast Asia are not true corporate entities. SMEs have a very thin corporate veil, meaning that the ability and willingness of the SMEs, you look not only at the business, how it's performing, but you look at the major shareholders, the people making decisions about cash inflows and outflows. Do they have the ability and willingness to pay? And I think that's sort of looking at different levels, but also taking into account the more dynamic factors of information. So trying to marry what works, with what could work, to be honest, because it's an ongoing experimentation.
But ultimately, you want to participate in platforms that might already be created by the banks themselves, right? And be able to look at your scorecards and offer that as a service, or maybe as a white label type of product from you to the other banks. Is that the direction that you are taking now?
Well, for us, I mean, the way we've talked to sort of potential banking partners, etc., I've probably talked to all of the top 10 banks. The ones that are more keen to work with us are, not surprisingly, not in the top 5. So those people we've signed up with. Again, why? Because I think they have less to lose. They have less of a legacy issue, and they're more willing to experiment. So, whether it be on, custody of funds, whether it be on things like sharing information, a bank may be strong in retail, but they need help with some of their SME customers, for example. Those are the types of things that, we see happening more and more. And over time, one thing which, as any small business owner would tell you, you can't stand still, right? And just because today your revenue stream is one thing, doesn't mean a year from now, you just keep on to that without offering additional ones which make sense to your customers. Like I said, the corporate veil is very thin, so not only does the SMEs evolve, the business owners themselves evolve. And what else can we do with them? The dream of open data, the dream of data sovereignty, where people actually own that data and are able to give consent so that eKYC works across all platforms, not just banks. It creates really, one of these very interesting scenarios where then our partners that you see aren't necessarily just banks and let's say, non-bank platforms or fintechs and bank platforms, but it goes across different industries. You know what I mean? So with an open banking platform, you really talk about the customer experience, the main interface. Underneath the interface, what is driven by, whose APIs is it? The customer doesn't care. Am I borrowing at the lowest rate, at the right time, with the right timing, and such that my payment schedules are flexible, and they understand my needs and are able to serve my needs? Those are, I think, the questions of the future. And if it's going in this direction of more openness and collaboration, it's exciting.